Housing market predictions for the next 5 years promise lots of surprises. Fasten your seatbelt. It's not too late to prepare for the next housing crisis. Builder confidence in U.S. housing market ends 12-month streak of declines. Despite the housing market frenzy, 80% of buyers in the past 2 years don't regret their purchases. Hey guys, this is Chris. Welcome back to the channel. We're talking housing, and it's always fun to talk about this one. And with all of these kind of things, it's always the same. It depends on which market you're in. And in fact, I want to show you this. This is according to Zillow. They were looking at 300 housing markets and sort of forecasting. Some markets that are saying that are still going to go up in the next year, and then other ones are going to go down. So you can see the map for yourself. They're predicting this again. This is Zillow saying California, say in the west, is going to go down. Maybe parts in the Northeast, right, are going to go down. Parts of Texas, New Orleans, you guys can see the map, are going to go down. Midwest down. But Florida, I guess they're saying maybe go up. I know Florida's been an interesting market, but it's because essentially you had a lot of people moving from the Northeast down to Florida during the COVID situation. So it's definitely been a hotbed. Me personally, I don't want to deal with the hurricanes, but that's just me. Everyone has got to make their own decision for what's best for them. In terms of what would the housing market look like if it were to go down? So this is just a prediction. This is actually looking at the Case-Shiller U.S. Home Price Index, just to give you a general sense of sort of where prices are going. You can see that the prices have definitely cooled off a bit. And this is the lines you're seeing on the chart here is if it were to be a 10% drop from the top, what it would look like, and then also a 20% drop from the top, what it would look like. The reason why we're talking about drops is because we had a whole bunch of different projections going into this coming year. In 27, in fact, we're actually not going to read all of them, but I want to read a few of them with you guys and go over some of the things because some of them really stood out. And you're gonna find a couple different themes throughout this. You're looking at what interest rates doing. You're also looking at whether or not people are going to be employed, and also what inventory levels are at. So let's get started here. This is Realtor.com. This is what they say here. They said the economics team at Realtor.com predicts that the median price of existing homes will rise 5.4% in 2023. So they think home prices are going to go up, and you're going to find this is all over the gamut of what people think. While mortgage rates average 7.4%, and then they say the slowdown in home sales transactions that began as mortgage rates surged in 2022 is expected to continue, leading to a moderation in home price growth and tipping housing market balance away from sellers. That's according to Realtor.com. Redfin, they got a different case. They say the firm's baseline forecast predicts that the median U.S. home sales price will fall 4% in 2023. Prices would fall more if not for the lack of homes for sale. We expect new listings to continue declining through most of the year, keeping total inventory at near historic lows and preventing prices from plummeting. So this is actually really interesting. So basically Redfin is saying there's just not enough houses out there, and still people want to buy it. And that's why I mentioned before when we first started talking about this is you got to pay attention to inventories, and it's going to depend on your market. But they do think prices will fall 4%. However, we got some more predictions, or projections I should say, and it's fun to take a look at these together. So Amherst, they're saying the real estate investment firm, which owns a massive portfolio of single family homes, so they're telling that it's going to fall 5% is what they're predicting between September 22 and September 25. Oh, wow. Interesting. So that's kind of a long projection. So they're kind of basically saying flat to down. And then they say incomes are the other side of the seesaw for mortgage rates in setting home prices. We saw no middle income wage gains for decades. Now it's happening big time. Higher rates are the headwind, but rising incomes are a huge support and tailwind. So that's why I just wanted you guys to understand sort of like all the different things that we're tracking. Someone asked me before as well, what do I think happens if we have mass unemployment, say in the USA, or unemployment were to go up? Yes, obviously I think the housing market would definitely cool. The other one too, we're talking about employment stuff like this. Keep an eye on what young people are doing. Are they deciding to go out and rent, or are they essentially living at home? During the pandemic, a lot of young people moved back home because essentially it was just too expensive for them to live somewhere else. So we'll see if that changes, and we'll take a look at some more predictions. This is Wells Fargo. This is what they say. The bank's forecast model has U.S. home prices falling 5.5% in 2023. Markets where home prices shot the highest are now vulnerable to a disproportionate swing to the downside, notably in previously white-hot markets in the Mountain West, which saw an influx of remote workers at the onset of the pandemic. Home prices in desirable locations, which comparatively tighter supply, are likely to hold up much better. Talking about desirable locations with tighter supply, I always keep an eye on what's going on in Santa Monica. Prices are still expensive, and if you don't know, Santa Monica is a really great location in LA. It's you're close to shopping, you can walk everywhere, you're close to the beach as well. But it's just still expensive. So I would agree with Wells Fargo, right? It depends which market, and highly desirable ones are going to still stay high because the supply is tight. You go to an urban area where there's just not that many places to build, right? Where are you going to get the inventory from? The other thing is too, which I thought was interesting, they were saying the Mountain West, and I'd be curious if anyone in the community is in that area, if you've noticed any sort of cooling in the market, because they're saying in Wells Fargo that a lot of remote workers are headed out that way. So I'd love to hear you guys if anyone's in the Mountain West. Here's Goldman Sachs. They're saying they're a little bit more bearish, you'll see. The investment bank expects U.S. home prices to decline 5 to 10% from top to bottom. And its official forecast model predicting a 7.6% decline. Quote, there are risks that housing markets could decline more than the model suggests. So they're bearish. That's Goldman Sachs. This is Morgan Stanley. This is what they say. The Wall Street Bank expects home prices to fall by around 10% between June 2022 and the bottom in 2024. I mentioned to you guys before that the housing market moves much slower than the stock market, so this is why it would take longer. And it's hard to tell where the bottom is going to be exactly, but this is sort of what they're saying here. If mortgage rates fall by more than expected, Morgan Stanley researchers say that the peak to trough decline will come closer to 5%, right? So it just depends what the mortgage rates are. However, if a deep recession manifests, Morgan Stanley predicts U.S. home prices could crash 20% from top to bottom, including up to a 8% home price decline in 2023 alone. The fact that we expect home prices to start falling on an annual basis in March 2023, despite tight inventory, reflects how unprecedented this affordability situation is in the U.S. housing market. However, although supply doesn't keep home prices growth floored at zero, we do believe it prevents home price decline from becoming too large. Again, we're talking about inventory and sort of where you guys are and things of this nature. Moody's is saying the firm expects a peak to trough U.S. home price decline of 10%. If a recession were to manifest, Moody's would expect a top to bottom home price drop of 15 to 20%, which is quite a lot, right? You guys see that. Affordability has evaporated, and with it, housing demand. Prices feel a lot less sticky right now than they have historically. It goes back to the fact that they ran up so quickly, that's right, during the pandemic, and sellers are willing to cut their price here rapidly to close a deal. One thing is that if you guys lived the 0809 crash, basically people over leveraged themselves. And then when they lost their job or something happened, be it the interest rates went up, they couldn't afford said houses. And I say houses because people bought too many. The situation we have right now, my understanding is that the luxury houses are the ones that ran up the most, and then some markets people retreated to during the pandemic and went up quite a bit. I always mention Boise. That was one of the crazy markets. That one's probably going to crash or it has already. But it was interesting that the one map that Zillow said that Miami and those sort of Florida area, they think this is going to go up. So I'd love to hear from anyone in the community that's in the whether it be Southeast Asian and say Florida. Also too, I know in like areas like North Carolina are hot markets as well. Even places like Tennessee, Nashville are expensive. Housing is expensive. You guys know this, but with interest rates going up and job market cooling, we may see some downward trend. And it just depends who you ask. But it looks like, out of the different analysts, you're looking maybe between 5 to 10%. Some saying high as 20, but we'll see. We'll see what else we go on. So this is Yield Street. So they say by the third quarter of 2023, Yield Street expects U.S. home prices to be 20% below its 2022 peak. So again, this isn't necessarily from here, just from the peak, right? Obviously, some markets will be less impacted. Markets that will be more impacted are the ones where you have a lot of inventory of new homes. Phoenix, Las Vegas, Dallas, and Boise. So I think what it was, they built too many and not enough buyers now, probably. These are markets with a lot of construction, with a lot of new homes. These are the markets that will be the leaders in terms of how much home prices decline. There will be some markets in the Northeast which haven't had a lot of new construction, where home prices are expected to fare better in terms of declines. And it's funny too, if you watch YouTube, there was one of the scammy YouTubers, I think it's Andre Geek is his name. I think he bought a rental in Vegas, and it's funny. A lot of those guys live in Vegas, and they think that everywhere in the country is like Vegas, and it's simply not true. I think those markets, right? Phoenix, Vegas, Dallas, and Boise, those are the ones that are going to crash the most. So if anyone's in those markets, I'd love to hear your guys' thoughts on that. Now, is everyone getting fired and things of this nature? Are there layoffs at every company? It was interesting because there was a couple articles, and it must be Apple PR, that kind of stuff. But basically, it was something I had thought about as well when we saw that Google announced layoffs. What's going on over at Apple? Evidently, they haven't announced anything, and they may not be. You can read the headlines. How Apple has so far avoided layoffs, lean hiring, no free lunches, and one of the differences is that, and this is not just Apple, but if some companies, were a little bit more strict on crazy spending, right? For example, crazy spending would be something like Mark Zuckerberg saying, you know what? I'm just going to throw all our money into VR glasses, that kind of stuff. However, to be fair, you never know. Maybe in 15 years, 20 years, or whatever, the meta world, metaverse, whatever you want to call it, maybe that will pay off for them. However, right now, right, the companies that were more tightened the belt a little bit more strict on spending and didn't do too much experimental stuff. Like, for example, during the run-up, we had some places where, spending a lot of crazy money, like on helicopter taxis, that kind of stuff. And I say crazy money because that's, even if you do get it to work, it's still pie in the sky for a while. But evidently, Apple wasn't one of those companies. The other thing is, too, which the other one is, Apple is not necessarily an advertising company, which is where more like a Google or a Facebook is. And the other thing that they're talking about as well is Apple doesn't have as big of a retail footprint, or sort of just like physical footprint, whereas something like an Amazon, who just has like warehouses and cars and all sorts of stuff all over, like there's a bigger physical footprint. So Apple's poised to be a little bit different than the other big tech companies. However, if you're in banking, this was about essentially rumors going around that even more people may end up losing their jobs. So it could get real scary in the financial industry. I was looking at these charts, though. Where we are today is different than in 0809. This is back in 2007, 2008. This just shows you a list of the banks and how many people they basically had on staff, and then how many ended up cutting. The red is the people that they cut, and the blue is people had the head counts, essentially. But when you compare it to what's going on today, it just looks very, very different. So, I think there might be more layoffs announced. Like I said, the rumor mill essentially is that there are, and for these kind of things, we've found that all the reporting on any of the kind of rumors have been spot on, actually. Now, J.P. Morgan, they're saying that there's a lesser chance of a recession. However, there's still a 73% chance, just lesser. So back in October, according to the S&P 500, they were saying like a 98% chance, but now there's more like 73. And kind of what people are watching is how our earnings reports come in. Many of the tech companies are probably going to have less earnings and less growth than they've had in the past, and that's sort of what we're watching. So anyway, this is sort of an update on the housing market. Love to hear your thoughts on any one of these things that we've talked about, and also hear about your neck of the woods. If prices are coming down, if inventory is going up, is anybody building anything, and what are young people doing? Are they living at home, or are they deciding to go out? So thanks again for watching, and please share your thoughts, and I'll catch you in the next video.